Now, the big talking point this week has to do with the geopolitical tension and the conflagration that has taken place with the war in Iran. And this is something that is constantly developing. But what does it mean from the perspective of Indian investors and you specifically? How do mutual funds look at these developments and how are they adjusting their portfolio strategies? Why don't we speak to somebody who will give you those answers? Sanjay Doshi, who's Head of Research and Investment at Abakkus Mutual Fund, joining me today. Sanjay, thanks so much for taking the time. First question, why does this war seem dramatically different from anything that we've seen over the last 2, 3, 5 years?
Yeah, so very well put in terms of how do we see the current conflict. Obviously, there will be some impact. We will have to take into account how our energy needs have been met, because that's a very large dependency we have. Roughly around 40% to 50% of our energy requirements come from this region. But at the same time, we have to be mindful of what the real India story is. And if you look at how the recovery we have seen on an overall macroeconomic basis, for the last 2-3 quarters, we have started to see meaningful improvement across most parameters on demand, on consumption, as well as the capex intensity, including private capex now coming back into the system. So if you look at micro data points that we would like to focus over here with respect to auto sales, cement sales, you look at power consumption, GST numbers, all of them are in the right direction from an Indian economy point of view. Definitely the conflict that has come in would have an impact given the way crude prices have moved up. But we have to be mindful of where do we see this from a little bit medium to long-term basis. There would be near-term volatility. It is appropriate from an investor point of view to be a little bit hassled by it. But our view is that one needs to be very calm and patient and think of it from a little bit longer term perspective. We have seen in the past various conflict across the regions would see a near-term reaction as investors get a little bit more risk averse. They look at other asset classes. But then over the medium to long term, if the core dynamics of an economy stays very strong, which we believe India is on a path of major recovery on macroeconomic and earnings growth, then investors do come back, and patient investors with a very disciplined approach to investing would benefit out of this.
Okay, so let me ask you a follow-up to that then. We're seeing a disruption even as we speak, Sanjay, and equity markets have taken it on the chin, and I think this is something that global risk assets have seen as well. India is not an outlier from that perspective. In fact, other markets that have run up substantially more than Indian equity markets have seen a bigger correction. I'm talking about the South Korea's KOSPI as a benchmark that has dropped so dramatically. Thailand has dropped dramatically, a few other markets also. The question that I have for you is, are these opportunities to double down and buy? And from your perspective as a money manager, is this something that you are actively doing right now?
Yeah, so you rightly put, those are the factors that some markets have done exceedingly well over the last 12-15 months. And at a matter of caution, you will see people with this kind of volatility, investors would be a little cautious on risky assets. So that's the first trade which you will see capital moving to more safer assets and people trying to take in profits wherever possible from a trading perspective. But if you look at it from our thought process on Indian economy, as I was trying to highlight that macro level, the kind of efforts the government has made by giving boost to Indian consumers through tax cut and GST rationalization, the way the central bank or reserve bank have been very active in managing currency as well as ensuring liquidity in the system, we have seen a recovery taking place in India, which is also giving a lot of confidence on the capex side, especially with the kind of long-term FTAs the government and the country has been able to do with some of the large trading partners. So in that context, we would say that yes, you will have to be mindful. You will have to evaluate how things are evolving. You can go a bit slow and stagger your investment. But these are the opportunities which you will get, because if you see the broader markets, there could be a little bit higher pain, as is the case when there is volatile times. But that's the right time you will try to take the opportunity and look for the investment from a little bit longer 3-5 year views.
You see opportunities right now in the market where deployment can take place, Sanjay?
Yeah, surely. So at the market level, what we have noticed is broader indices are fairly stable still at an Indian context. The small cap is a little bit where they have seen some correction of around 12-15% underperformance. But if you go deeper into stocks, if you go to the depth of the market, you will find stocks which are down 40-50% or even higher from lifetime highs. And some of them could definitely be an opportunity when you look at it from a growth recovery from a 3-5 year views. Near term also, we believe the next 12 to 18 months, we can see earnings growth come back to 12 to 15% kind of growth. And which is where investor over a period of time will be taking that into cognizance and look forward to Indian markets.
While you may be obviously bottom up in the way that you approach your portfolio construction, I'm just wondering, Sanjay, whether certain themes are apparent in the construction of your portfolio. And obviously, you're not looking at the themes as a top-down approach, it's emerging from the bottom up. But are there specific themes that are emerging stronger than others?
Yeah, true. Very rightly said. There are global themes that work out, and there are also domestic themes, which is the result of focus by the government in terms of their policies. So those have the tailwinds or the backup in that sense. To our mind, manufacturing in India could be a big opportunity. We have seen a lot of government efforts to improve self-reliance in many of the key industry segments. A lot of government support on PLI and semiconductor capital subsidies and many other areas which they have worked out on. In fact, ease of doing business is another area which really helps from a long-term investment perspective in certain industries. So that's one segment. Healthcare is another where we seem fairly confident about the global opportunity when Indian companies can try to make out. So that's another segment which we are fairly optimistic on. From financials perspective, also a broader participation in the breadth of financial markets could be a good medium to long-term story given the kind of wealth creation that is happening. So from a little bit longer time perspective, these are the key areas that we are fairly constructive on. And obviously, we'll have to look at each and every company from a portfolio perspective and risk reward at a point of time, which remains very core to us at Abakkus in terms of our investment philosophy and framework.
So Abakkus is relatively new to the mutual fund space, right? And so therefore, Sanjay, I'm just wondering what kind of communication is going out. And this is an opportunity, I think, for you to talk to your prospective investors as well. So from that perspective, what is something that you would like to say about the next 12 to 18 months, just to set expectations? Because people have had to contend with a pretty rough 12 to 14 months, right? They've had equity markets underperform in a big way. So what is the next 12 to 18 months looking like?
Yeah, thanks. You're right. So we are very new to the industry in a way from a mutual fund perspective. But Abakkus as a group has been very active in market for the last 7-8 years on the alternates platform. There's a very core philosophy, investment philosophy, and a meets framework that we follow in terms of how we look at investment and research. And that really stands out to our mind. As far as our first product on mutual fund was concerned was a flexi cap, and we are looking forward to investors in terms of providing them with the right opportunity in terms of products from a 3-5 year view. Given the kind of correction that we have seen in the breadth of the market and to more importantly to look at in context of recovery in macro as well as earnings growth, we believe small cap could be an opportunity from a 3-5 year view. From a 12 to 18 months perspective, definitely within this space, small cap investing requires a lot of discipline. It requires professional approach, and definitely there is some inherent volatility. So we would be careful in highlighting this to the investors and ask them to be gradual in their deployment of funds. But this could be interesting opportunity when you look at it from a little 3-5 year kind of a view.
Yeah, well put. Sanjay, thanks so much on that note for joining in, for speaking to us. Pleasure speaking with you.
Thank you very much.
That brings us to the end of this edition of Your Money Matters. Let us know what you'd like to talk about or you'd like us to talk about, and we'll take it up on the show. Thanks so much for watching. This is NDTV Profit.